So obviously we had a very good day on the market for absolutely everything. No particular correlation why the gold was up, crypto was up, stock market was up. The main catalyst remained the same. There is no current negative beta on the market. This means if the whole market decides to go up or down, everything will go up or down. But I have something very interesting because my DMs on here on Instagram simply exploded. Let me give you the chart for gold. Let me explain to you what you should watch because I have a lot of jurors. Very interesting people who are actually dealing with physical gold and silver are more interested of what's coming. Look at this. First of all, very interesting upward trajectory today of the gold. But the problem, as you can see over here, the earliest high of 5,100 was not reached. For our chart, we're looking right here, right now. The highs of today was, and it still is, at $4,963. What is this telling you? So I put different colors so you'll be able to follow up closely. There are two scenarios. Every time when the new trend is trying to either replicate the previous one or build a new trading channel, you have two options. It's either gonna break to the upside, outperforming the previous one, which as you can see over here, the yellow line, look at the trajectory. The previous highs over here of the yellow one was not reached again. So what this is giving us as a probably hidden signal is that the following move will be down. Do you see where I put the red neckline? So if it goes below the neckline, we're most likely going to see pushing all the way down to the levels of around 4,600. This is around 7% down from the current levels. But this is not over. This could be a good pullback. Why? Because the gold will try another turn to break and go above the previous highs, which as you can see was around 5,100. This is going to be the second try. Usually technical traders will be looking for 2-3 different tries, which means is that if a particular channel is trying to break in or out and on 2 different tries there is no success, the third try most likely will reverse on the downside. Why is that? Because there's something known as double top or double bottom. If you look at over here again on the chart, look at where the blue line that points towards 7.6% down expectation move, right? So this is going to create a inverted W pattern, which is very interesting considering that there might be another additional pullback below this. But this is not the case because if you look at closely, there is a push. The last 3 candlesticks indicate that there is a push for higher highs, right? Which is unusual. But if this goes below, it will touch and it will create a double bottom. Or for some people looking, because this is 4-hour chart, most of the people will be looking at the big picture 4-hour chart, but they will be trading on smaller time frame. And if we go on smaller time frame, this will look like most likely opening for a new channel, and this will look like not like W pattern, inverted W pattern, because this only appears on 4-hour chart. It will most likely appear as double bottom, which might consider a lot of people that we might see reversal. The problem I see over here is that you see the red neckline. When this falls below the neckline, touches this level of around 4,600 and trying to bounce back up again, if it just touches the neckline and then falls down again, this means that the red neckline will turn the new resistance level, which means is that the lower highs and the lower lows are coming next. And if I zoom out, if we just look closely and try to understand what we might expect judging by the previous price action, we are going to see exactly that scrolling back there was something very similar. So we had this crazy run up over here. This happened in 2024, and I'm going to draw the line for you so you'll be able to understand. So closely, first we were in this channel over here. This channel was consolidation. Then we saw this crazy run up, which created another higher level. Then we had another consolidation for, as you can see over here, from May until September, throughout the whole summer, okay? Then it took a while for the market to decide, are we going to push to another high, right? Then we had another high. But pay very close attention. This was not something that a lot of people expected because the volumes were kind of low, right? You look at the volumes were not there, which meant that people are falling every single day. Are we going to get better price move, right? Considering that definitely most of these moves were not related to the same price action. So essentially, let me show you very simply what to look at it. Okay, I don't want you to become an expert of reading technical analysis, but let's find the differences. First of all, I want to show you the exact same pattern that happened in 2022. As you can see over here, we had a channel which was related to the price action, double bottom, followed by lower volume. The lower volume exhausted the buying pressure and released massive selling, which led to complete sell-off, which effectively lasted a couple of months. Try to memorize this particular pattern, this particular channel, and this amount of volume. Now let me show you the current. This is the most current updated momentum situation with gold. Does this look familiar to you? Because it is. We have same time frame, which is 4 hours. We have double bottom. We have volume that after the blow of top, after the 5,600 sell-off happened, the volume is down. And the lower the volume it gets, we already know what happened in 2022. We already knew the price action when the volume decreases, and we already know what is the trading channel. This is why I put the trading channel and try to make it as simple as possible. It is much clearer, not so many indicators, so you're not going to get confused. Because like I said, I have a lot of people who are dealing with physical gold, and the price of physical gold are less volatile than the actual paper. And these people are really, really interested what is the price or what the price going to be, because it changes their price, and they have to change prices of the jewelry every single day. You have to price the labor, etc. Right? So this is what I want you to focus. Look at the volume. Look at the volume underneath. The volume will tell you exactly what is the sentiment. If you see the volume decreases, or if you see the volume increases with major red candles. If you look at over here, we had major spike in volume before the sell-off and during the sell-off. We have a large red candles, and this happening in real time. I believe the latency from the actual central markets is around 15, 20, 25, 40 seconds, depending on your location. But you will be able in real time to justify what could be happening with the price action. Because like I said, currently we're seeing that there is a, I would say, failure to hit the previous highs. I'm not even talking about breaking the previous highs, which in my opinion is showing weakness over here of the market. Why this weakness appear? Well, this weakness appear because obviously there is much more negative catalyst coming around the corner. It's not only for the gold, and as we already agreed that there is no longer negative beta, meaning there is no longer hedge intrinsic value for any of the market assets, because everything crashes and everything goes up and reverses at the same time. The whole thesis for buying or holding the gold just to protect yourself from a market going bust, it's no longer the case. So this is what you want to pay very close attention. You want to look at the volume, and you want to look at how the overall picture of 4-hour chart replicates the previous price action which I showed you. It would be very nice if you can put them on 2 monitors or split screen. Maybe you will be able to see how similar everything is, because I bet you that most people or most institutional investors who traded in 2022 run up and crash are still in the game. They're still participating in this price action that we're seeing right now. So they're playing the same game, and why wouldn't they play the same game when you already know how it works and you know how to win, because you have edge over anybody else. So this is what I see over here. I see that if it doesn't break above 5,100, it will fall below. It will go lower, 4,800. It might even hit the 4,500, which was the neckline I mentioned earlier. And then I'm going to give you another update, because it will get very interesting if it breaks under 4,500. Then we're talking about completely different levels. We might be looking at 4,400, 4,200. But stay tuned for that.